All right, let's talk about the government's tax system. But I want you to forget everything you think you know. Because according to expert analysis, it's not just a bunch of rules you have to follow. It's a game. A game with very clear incentives that's designed to be won. Okay, so right off the bat, that's a pretty bold statement, right? The idea here is that the tax system isn't just one set of rules for everybody. It actually runs on two totally separate tracks. There's one for the average person who just, follows the rules as they're told. And then there's another one for the educated, for the people who really understand the game. And here's where you can really see that split. On one side, you've got your typical W-2 employee. They earn money, the government takes its cut right away in taxes, and then they get to spend what's left. But look at the other side, the business owner or the strategist. They earn money, then they spend that money on things their business needs, which are deductible, and only then do they pay taxes on whatever is left over. It's a fundamental reordering of the process. The real difference isn't just how much you make, but how you're legally structured. I know, that sounds completely upside down. But according to the folks who analyze these outcomes, it's often true. It really hammers home the point that the biggest factor in your tax bill isn't just your income, it's whether or not you have access to the information, to the strategies built right into the tax code. So before we can get into the strategies, we have to ask a bigger question. Why? Why does this two-track system even exist? What's the government's goal here? And this is where you have to totally change how you think about taxes. The tax code isn't really about collecting money to keep the lights on. It's more like a giant system of rewards and penalties that the government uses to get us, citizens, and businesses to do certain things it wants done. So here's the deal. The government basically dangles these tax breaks as rewards for people who help them out. Things like creating jobs, providing housing for people, investing in energy, taking on financial risk. These are all things the government would rather not have to do itself. So it rewards the investors and business owners who step up and do it for them. Okay, so that's the why. Now let's get into the how. How do these strategists actually take advantage of the system? Well, let's talk about the first big lever they pull, using a business entity. This concept is absolutely critical. It's called a pass-through entity. Instead of a business getting taxed on its profits, and then the owner getting taxed again on their income, that's called double taxation, the profits just pass through the business directly to the owner. You only get taxed once. It's a huge, huge advantage right from the start. So just by choosing to structure your business as one of these common types, instead of as a standard C Corp, you're immediately playing a different and much better game from a tax perspective. This structure is really the foundation for everything else. All right, so that's lever number one. Now let's talk about lever number two. And trust me, this one is a game changer. It's what many experts believe is the single most powerful set of incentives in the entire tax code: real estate. And the why behind this is actually super simple. Think about it. The government really, really does not want to be in the landlord business for the entire country. So to get private citizens to do it, they offer up some of the most incredible tax benefits imaginable to anyone who invests in property and provides housing. Now get this. This is where it starts to feel like you're bending the rules of reality. The key concept is called depreciation. It's a paper loss. Even if your property is going up in value, the government lets you pretend it's going down, and you get to deduct that fake loss from your income. You haven't actually lost a dime, but you get a tax break as if you did. Okay, but it gets even better. You can actually put this on steroids. There's a totally legal strategy called a cost segregation study. You basically go through the property and identify everything that isn't the core structure. Things like carpet, appliances, fixtures. And you can depreciate those things way, way faster. This creates a massive upfront paper loss that you can use right away. Okay, this is the grand finale. This is where we combine those two powerful levers we just talked about, the business structure and the real estate incentives, to create something Well, pretty incredible for your tax bill. So here's the million-dollar question, right? Normally, the tax code says that passive losses, like from a rental property, can only cancel out passive gains. They can't touch your active income, the money you make from your actual job. But like with any good game, there are some cheat codes. And here it is. Tucked away in the tax code is this amazing little workaround. If you have a short-term rental, think Airbnb, where the average guest stays for 7 days or less, and you're actively involved in managing it, the government doesn't see it as a passive investment anymore. They see it as an active business. So let's put some real numbers to this so you can see the magic happen. You use that accelerated depreciation strategy on your short-term rental to generate a massive paper loss. And now, because that rental counts as an active business, that huge paper loss can be used to directly wipe out your active income from your day job. And there you have it. The final math is just stunning. A large enough paper loss can completely eliminate the taxable income from a six-figure job. This strategy can and does legally reduce a person's income tax liability all the way down to zero. So after all that, what's the big takeaway? What are you supposed to do with this information? What's the bottom line? The single most important thing is to change your mindset. The tax code isn't a bill you're forced to pay. It's more like a treasure map. The government is literally telling you exactly what it wants you to do, and it's showing you where the treasure, the tax breaks, is buried. Your job is to follow the map. Ultimately, this whole thing lays out two very different paths. One is the path of the taxpayer, who just sees taxes as an expense. The other is the path of the tax strategist, who understands the government's goals and aligns with them to get the rewards. So the final question is really one you have to ask yourself. Which path are you going to choose?